Hi everyone, welcome to Inventive Mind. Thank you for joining me today. Today I have a guest with me to talk about indemnity clauses and insurance, your business insurance and all of that. So before that, I will just introduce my channel. If this is the first time you're coming across my channel, welcome. Or if you're returning to my channel, welcome. As you know, I'm an intellectual property and business law attorney. I do trademarks, copyright, patent due diligence. I create entities, LLCs, corporations, benefit corps, all of that. And then I work with entrepreneurs and startups. So this channel is mostly for that kind of community or anybody who's kind of looking for information. I'm trying to bring interviews with people that I find interesting and also helpful for things that are happening in this community. So with that, just keep in mind, this is for informational purposes only. If you have a specific question or want to connect with somebody like Brendon, I will put his information below. This is just to kind of give you informational background on what it is, so you get to know what you need if you're new to this, and if you have been doing things but you want some clarity, this may help you. And I also have other videos on my channel that are called startup strategies. Those are usually bite-sized, meaning under 10 minutes. So check those out. The interviews are usually 30 to 45 minutes, so they can be a little longer. So with that, I will introduce Brendon. Thank you, Brendon, for joining me today.
Of course. Thank you for having me.
So I will just share how I connected with Brendon, because I have another attorney friend of mine, a colleague, introduced us because she was in-house. In-house meaning you are working for a corporation, you are their attorney for the corporation. And so when you hear in-house, the term, that's mean in-house attorney. So when she was working in-house at a biotech company, she had worked very closely with Brendon. And I was in-house at a public corporation at some point, like a few years ago, before I launched my own practice this last year. So I know how it is when you're in-house, you work with a lot of professionals, and sometimes the professionals that you're working with really had to help you to kind of guide you along the way on their specialties. So, so she introduced us and we had a chat, and I wanted to bring him on here to kind of share two things. So I'm going to do two videos. This is one of two videos. This one is going to be talking about indemnity clauses, what they mean. And I put a short video that I'm going to link to this that's going to tell you what that is in terms of legal wise, like a legal information wise. But this is just going to be talking about the insurance wise, what they mean, and how you had to work with that if you're getting a policy or you have a policy. So Brendon started off, he have a bachelor's in finance and business from Virginia Military Institute. And he been doing insurance for 5.5 years, he said. And he's in San Diego, and he specializes in life science biotech community. So he's very knowledgeable in this area. So I thought I will let him kind of share his insights, because none of us are experts we are experts in some areas, not everything, right? So it's good to know. So Brendon, please share your experience a little bit. I like to always kind of introduce who I'm interviewing and kind of see, why did you choose insurance?
Yeah, well, that's another story. We could have a whole separate video for that if you had enough time. But no, so
short video, short version.
I don't think anyone really chooses insurance. It kind of chooses. But no, so thank you so much for having me. I'm more than happy to be on here and share and kind of talk through this with you. But yeah, so I, as you had mentioned, I've been in this industry, for 5.5 years. I was in prior to that at formerly. And so I kind of just fell in love with the entire process of insurance, and really just the relational side, and really digging deep, to be more of a soundboard and education. And ultimately, we try to be an extension of a team. And, when companies are very early stage, that's really what they need, is because, we're about to talk about it, but the first real reason that companies purchase insurance is contractually, whether that be through a master service agreement, a vendor agreement, partnering agreement, whatever have you. I mean, 90% of these contracts that you're entering into will have insuring language and insuring requirements that, a lot of times, right, you're putting the cart in front of the horse, and everyone's so excited to get this contract and sign it and execute it, and then all of a sudden, they're being asked to present a certificate of insurance, and they say, well, first of all, we didn't know about this, and we don't know what insurance even means. And that's where we step in and really, provide the hands-on guidance. And, San Diego is such a hot spot and such a amazing, community of biotech. And we have had so many success stories that start, early in a garage and take off and end up being, the next Illumina, right? So they started up in a garage with 8 people. And so, the San Diego, biotech in Q2 just got, the most funding that we've seen, in history. So I think we're going to be, if not number three pretty soon here, and just continue to grow. So, once again, I think our role is to come in early and really provide this guidance. And, I'll let you kind of ask the questions about it to initially start off, but, the insurance, the foundational levels is really where we start. And then we continue to grow through your inflection points as your team grows and, maybe enters into discussions with the FDA and starts to progress the drug through the clinical stages, ultimately to commercialization, IPO or acquisition. So that's kind of the process we help follow along with.
So with that intro, I wanted to say, like, when I was in-house, I remember actually asking for the insurance certificate for certain things we had to get. If we are doing a contract for some equipment sometime, for leasing equipment, let's say, we will actually, if they ask us, like some big company like GE might say, hey,
right,
can you send us your insurance certificate of insurance? And Brendon is part of Marsh and I forget.
McLennan, yep. Mm-hmm.
McLennan.
There you go.
At the time, I was using their other company that they merged with, which was Barney and Barney Benefit.
Correct. Yep.
So I am aware of them because of that, because when you are in-house, you do a lot of, you kind of have your hands on everything and had to learn a lot of different things. So that's why it's just, when we connected and we chatted recently, I was like, wow, yeah, I know what, I did have to do that.
I've done this before. Yep. Yeah,
I've done
absolutely.
this before.
Unfortunately.
I know. Well, it's good because it's kind of a process that people don't think about sometimes. So, those insurance certificates usually have like liability limits and all of that you have to showcase, because to show the vendor who are leasing you equipment, per se, that you're covered up to this much, you're covered up to this. So, with that, let's dive into the indemnity clauses, because I want to focus that on this video, and the other video we will talk more about like the business aspect of it. How about that?
Absolutely, perfect.
So can you kind of go through, like, from the insurance perspective, how the indemnity clauses work, what they are, and, kind of give some background?
Yeah, absolutely. So on a very basic level, and then I'll build from that, but on a very basic level, the reason that you're being contractually required to hold insurance from this third party is because they do not want themselves to be the first party of the insuring, essentially, of the obligation to insure. So for instance, right, when you enter into a lease agreement, which I know, not many people are in the office right now, but when you enter into a lab agreement, you're going to get, as we mentioned, this contract. And the reason that you're being required to hold these limits is because if there was to be an instance where insurance is in play, the company that you're leasing from, the landlord, does not want to be held liable. So they want you to have your own insurance so that you can indemnify yourselves, as opposed to having a third party indemnify you. So maybe building off that, right? So you're going to have it's typically around 3 paragraphs within a contract, and it is your indemnity clause. What the third party, as I mentioned, is looking for here is a hold harmless, right? So they want themselves to be, held harmless from any action or any liability that you can potentially assume throughout your your tenure, I guess, with this company. So within that, they're going to have certain limits and certain structures for very basic insurance, right? To ensure that, slips and falls are covered. Any damage to their premise, to their building is covered. Any injury that's caused by your product is covered. So, really here is where they're going to break it down to say, hey, these are the coverages you need and the limits that you need. We need, as you had mentioned, a certificate showing proof that you have these coverages so that we can file it in our system to ensure that moving forward, if there was to be an instance, we pull this out and say, here's your insurance. So that will be on an annual basis. So each year you'll be asked from your vendors or from these third parties asking for the certificates for a refreshed certificate of insurance. You think of it just like your personal auto insurance, right? So if your insurance is expired, you're not going to have the coverage and you're not going to be compliant. So in order to ensure you're compliant with your contracts, you always want to, address your broker to really keep you online to make sure that these contracts are being, upheld, because that's the absolute easiest way to be out of compliance, is to just let your coverage lapse or not purchase it in the first place. Now, I'm more than happy to go a little bit deeper if you'd like. I mean, in terms of kind of what the coverages are, what the waivers are, what some of the language is.
Before we get to that deep level, which I do want to get to in this video,
Okay.
let me ask you, so because I also work with consultants who are in the area and they have their own insurance, right? And I know like in life science industry, there's a lot of consultants. So in that kind of case, if they have an insurance policy and then they have a consulting agreement with the company, and what happens if that consulting agreement isn't aligned with the insurance they have? Because I think this is something we kind of want to point out, that when you're negotiating these contracts, you need to keep in mind what's in the background of you that you're depending on. So that's the reason. I mean, this is again for informational purposes. This is just giving you an overview of things to kind of think about. Obviously, you want to get an attorney involved and talk to your insurance company to actually look at your own. This is not legal advice or advice in that sense, but just kind of pointing out some of the landmines.
Right. Yeah. And we always say that. We always say, hey, look, we're not lawyers. We can advise on the language and the coverage, but please consult your lawyer. Yeah. So it's a great question. And, in San Diego, this is so predominant. We have so many early stage companies that are using consultants or friends in family, really. And it does start to blur the lines on the insurance and where the liability would fall, because in the instance you had mentioned, it sounds like those consultants you're referring to do purchase their own professional liability coverage and potentially ancillary coverages like general liability. Well, a lot of instances, companies are using these 1099s or independent contractors, and they don't have coverage. The contractors don't. And so in the event of, for instance, either I don't want to go too deep, so let me know if I am, but in the event that this contractor causes financial damage or injury to this company through their services, there's going to be no coverage that individual has for themselves unless you, once again, are showing proof of insurance. So we always advise our clients to ensure that you have your contractor either buy their own insurance or that you pick them up under your policy. A state required coverage, which, is kind of the most predominantly known, is workers' compensation, right? So if you don't have workers' compensation for that independent contractor and they're to be injured during the scope of your operations and under your direction, they could essentially file a workers' compensation claim, and without coverage, you would be on a hook legally. So once again, not to scare you, but always to make sure you're doing your due diligence, and that's something that your broker should always be doing and advising upon. is to say, make sure your IC independent contractors have their insurance. And if they don't, let's build it into your policy.
I think that's such an important point, because as a small businesses, entrepreneurs, you may not be thinking about it. You might go and get insurance policy, but then you think, oh, you're all covered. But then the thing is, that's what I say, is like, you want to have a good relationship with your service professionals, your attorneys, your insurance brokers, because you want to be able to reach out to them and say, hey, this is happening, what do I do? Is this okay with what we are doing, or do I need to update the contract? Do I need to, like you said, bring them under your insurance policy? Just because they are independent contractor doesn't mean you could waive liability. Like, especially if they're going into a facility or doing something behalf of you, that could get ironed out, like fixed, figured out during a trial or a litigation. But you don't want to get that far, because at that point you're spending tons of money for litigation. So that's why we are saying, look at the insurance, what the insurance options are, because there are a lot of different type of insurance too. That's why I'd like chatting with you, Brendon, because you're specializing in life science industry, right? And there's so many other different industries, but so you do kind of want to talk to somebody who kind of understand the industry you are in. So
yes,
with
absolutely.
that,
Sorry, I was just going to say, it's just nice to have someone in, and I'm not going to say that I'm the only broker in town that knows life science, but it does help to speak with someone who can talk your language about, the process from investigational new drug all the way up through, commercialization and trials between. Just because there's different insurances, and I think that's what you were getting at is, there's different insurances for all fluctuations and inception points within the company, right? That you need to ensure that you have, and there's no reason you should know when, these policies are necessary, but someone who, as mentioned, has a focus on a vertical, industry vertical would be able to guide you on. So.
Now, let's get into the indemnity clauses little deeper, just because I want to focus that on this. And we will touch some of these points again in another video, because we're going to be talking about the business structures and a little bit more about that. So with that, so Brendon, it's you to take it over and just kind of go into, from the insurance side, what we need to kind of keep an eye out for, again, for information purposes only. So talk to your broker, talk to attorney if you have specific questions.
Of course. So, a typical indemnification clause is going to consist of some language that you must comply, but also, straightforward limits. So from a very basic perspective, you're going to have some limit structures. You're going to have some general liability, some auto insurance requirements. You're going to have a small amount of property insurance that's going to be required. Workers' compensation is required by state. So of course, across the board, that's the only mandated coverage you must purchase. And then there could be some ancillary coverages that are required. Well, a lot of times when you are a very early R&D company, there's going to be a couple, if not multiple insurances that aren't necessarily applicable to what you're doing as a company. And once again, I know I'm getting off kind of on a tangent, but what you want to do is really have someone who knows ins and outs of the insurance review this for you, so that they can come back with kind of a summary to say, here's the insurance you're being required to hold. Here's what you currently have if you purchase insurance. You are compliant or you're not compliant. And if you don't have insurance, the broker should be able to give you, kind of next steps, as well as a ballpark of what they could anticipate you paying for this contract, so that can be also built in to negotiations potentially. And so going further into that, right, the broker is able to provide you with what I call ammunition to maybe push back, whether it be too high of a limit or whether it be just an insurance that, for instance, product liability. Product liability would be necessary if you had a product or a drug that you were pushing through the clinic or that you were selling. If you're an R&D company, of course, you don't have that quite yet. So there's no reason that you should be required to have product liability. And actually, underwriters will not be able to provide as a quote because there's nothing to rate that upon. So that's the number one thing that we would essentially push back on. You would redline it and then move forward. So diving in
And
a little bit.
that's
Go ahead.
just to bring it to a space wide is because we are going back into the contract structure and looking at the contract, and in the contract, in these contracts you get from a consultant side or the company side, you're pulling up somewhere, or we are looking at the indemnity clause, because indemnity clause is what is saying that who get the liability in a case of
Right.
something goes wrong. So that's why
Right.
Brendon is going into this section about, well, it's not relevant if it's a R&D company and this was in a clause somewhere, it's not going to be relevant for you. So this is
Correct.
where the pushback is. So just to kind of give you perspective how that ties in.
Yes, absolutely. And, just to maybe further it, a lot of times when you're working with, and let's just go to the wet lab space, or let's just say you are actually leasing space, if you put your broker and your real estate broker in touch, a lot of times they can help you really quickly through this process, because ultimately, right, it's your real estate broker that is giving you this contract that you're going to sign that has the insurance within it. And then yourself being the middle individual to contact us to ensure that we're meeting those requirements. So I have, many friends, within the industry that work on, placements of tenants and clients. And a lot of times we're able to assist you just by redlining it, getting through it, and then ultimately, providing the landlord with something that's very applicable and favorable to you as the client. So don't be afraid to kind of connect those individuals in those scenarios. It's typically very favorable for you as the client.
Exactly, and I think the other thing you want to keep in mind is these are specialized areas again. So there are attorneys who do insurance law who have done these, and they could work with you with that area. So with your brokers, if you need something, usually sometimes the brokers know where the limits are and they could give you that. But if you're worried and it's a big contract for you and you don't want to take on the liability,
Right.
that's going to burn out your whole budget if something goes wrong, you may want to consult, these professionals who are in that area and that have your best interest. So that keep in mind, if you are asking their broker for the information, their fiduciary duty is to their client. So you always want to work with sometimes make sure you're getting the information where you're getting it. Keep that in mind.
Right. Absolutely. Yeah. And I completely agree with you there. And to maybe further things a little bit, right, is a lot of times you're going to see, and this is kind of the language piece, right, a couple different things. One being very common is what we refer to as it's not referred to, it's actually in the contract, a waiver of subrogation. So what this waiver means is that, and it could be required across multiple policies or just one or two. It's always on the workers' compensation. I don't want to say always. I'm not allowed to use that word, but it's
Most
a lot of
likely.
times it's on, most likely on the workers' compensation. But essentially what this is the third party is essentially saying in writing that in the event of a claim, your carrier is going to be on the hook for it. However, after the claim is paid out, we are essentially saying that you cannot subrogate against our insurance thereafter. So you wouldn't be able to then go after your landlord's insurance to try to indemnify yourself or your carrier from what was paid out. And a lot of times that the waiver of subrogation is not provided in a standard quote, and it will actually have to be requested. So the best way to do this, and I always say have an open, as you mentioned earlier, right? Have an open line of communication. Yeah, we don't get paid by the hour.
Unlike attorneys.
So you can ask us anything you want at any time. I only joke about that. But no, seriously, the best thing you can do with your broker is send them, as soon as you get it, the snapshot of the indemnification clause of the insuring agreement, and let them go through it. And they would, at that point, know everything you need at a minimum to ensure that you're compliant. So as I said, waiver of subrogation is one. A lot of times, well, almost every time, you're being required to present a certificate of insurance. That party is going to ask to be named as an additional insured on your policy. So what that means is they're going to request this certificate that would be titled to them. It's going to have, you know, some requirements potentially in the comment box that you need to meet. Once again, this is something very common. You would send this to your broker and they would handle it when issuing a certificate. But an additional insured is essentially them saying, hey, your policies that you buy, you as a client who I'm speaking to right now, are also going to extend coverage to us in the event that we are also brought into a claim and named. Your policies are essentially shared at this time. So that gets a little bit scary. You know, your limits are now essentially stretched. But at the same time, these requirements and these very foundational limits are typically substantial enough to ensure that, you know, slips and falls or you know, minor water damage incidents are covered. You know, if there was to be more of a catastrophic injury, right, that's when you want to start consulting your broker as to go over scenarios if you feel maybe that your limits wouldn't be sufficient, and then you can start looking at other policies such as an umbrella just to, you know, extend those coverages into higher limits if necessary. But, you know, typically those insurance requirements that are the contractual are substantial and absolutely enough when you're starting your company out. But, you know, as you grow, as the team grows, as your assets grow, as your exposure ultimately grows, that's when, you know, having a broker who knows how to kind of provide you a roadmap is beneficial.
I would like to at this point also add, because sometimes I hear from people, they will say, you know, if you see something unfavorable in a contract, they will say, oh, it's okay, I will just buy insurance to cover it. But the problem
Right.
is, if the contract actually have something unfavorable
Right.
in there, that is, insurance may not be able to step in to cover it, because that's going
Right.
to be the, you already have disclaimed something, or you given up a right, or you taken up a liability that you didn't need to take up. So by thinking that you could patchwork through insurance, it's kind of a misnomer, because your contract obligation should align with your insurance. Even if you go buy your insurance, you know, they're going to need you to have a contract that's aligned with their policies. And if you have taken on extra liability that you didn't need to take on, or you have waived something you didn't need to waive,
Right.
you know, insurance can patchwork. It's not like, oh, I'm going to capture it here. I said yes here, and I got into this box. And you
Right.
can get out of the box by buying insurance. I just want to put that out there, because I think there is a mindset almost like, oh, that's okay, that's a little ding, but I could fix it with insurance. Not likely, because you need to kind of fix the ding first before and align the insurance you get. And I also want to
Absolutely.
apologize if you hear any noises in this video. We are filming this in August now, August 2020. We are still in COVID-19 shutdown, limited uh, things going on, and I think I have leaf blowers outside my place today. So,
I have a small faint sound of construction as well, but yeah, I'm in my place right now. But I mean, that's generally it in a nutshell. You know, there's some other, you know, requirements such as, you know, a certain level of AM best rating of a carrier. So, you know, you can't be placed with, you know, a lower standard carrier. The third party, the contract driver wants to make sure that in the event of a claim, you have a carrier who's financially backed and who isn't in any danger of insolvency, right? And once again, a broker of high standard is not going to even be able to internally legally place you with a carrier that would be out of contract there. Also, you know, a lot of times, which is one I caught the other day, thankfully. So a client had actually said, hey, we needed this coverage for a contract and the contract's expired. And so we're going to non-renew the coverage. And I said, do you mind just going back in and checking if there was a signified number of years that you had to hold coverage? And I said it because it was a 3-year requirement. So it was 3-year after the expiration of the contract. So because you're out of contract doesn't mean insurance can necessarily go away, right? Lots of it can. I never advise letting coverage lapse as long as your company is continuing to operate. So that's a disclaimer. But once again, it goes back to you have someone who can review this language for you. And, if we hadn't caught that, it may never have come up, but if it did, right, it would be a breach of contract and, that would have been absolutely liable. So that was a big one. And so we renewed it, and you renew the coverage at a minimal premium when there's no exposure, but you do it exactly for the contract, and carriers will honor that and underwriters will honor that. So that's another kind of piece to ensure that you're picking up and keeping mindful of.
I think that's such an important clue, because I actually mentioned this in that short video I mentioned I put together for indemnification clauses.
Yep.
That is one thing you had to look out for, is how long is your liability going to be running. The contract may end in a year, 2 year, 5 years, but your liability may run longer. So, and
Right.
that's another thing you do want to negotiate upfront if you can, because sometimes the reason that it runs longer is because that's the standard, agreement that the company uses for all their contracts. And
Right.
but you're only doing like 6 months worth of work. You really don't need to be on the hook for 10 years. But if you agree to it, there potentially liability that keep running. So this is where I always tell people, I always like saying, I like smart clients. I like informed clients, because those are the clients that I could help. But if a client come to me and just kind of say, oh, I know this, his standard, I'm almost worried, because
Right.
that's mean I'm at a place where now I had to teach them why they should care. So instead of having to do that one-on-one, that's the other reason I'm doing these videos, kind of educating the consumers out there, what you need to look out for as a business owner or a consultant, either side. It's good to have this kind of information and know what it is, because they are going to come up, and you don't the last place you want to find yourself learning this information is at a litigation point, because at that point you're spending thousands, like we joked about, but it's true. In litigation, attorneys get paid hourly, like every 6 minutes is a 0.1 billing. So, that's why the litigation cost is super high. So that's another discussion, but just want to point that out. So
Yeah,
we just,
no,
go ahead.
and I completely concur with you. And I think, I think the biggest pitfall that the early stage founders, and it is of course of no fault, but one of the biggest pitfalls is just that you do use, and I don't want to generalize, but a lot of times we're used on the insurance brokerage side as initially as a vendor, right? And we completely understand that you have agreements to take care of and you need to check boxes. But a lot of times, just having a conversation, getting on the phone and just really going through it with someone will help you not only, understand what you're purchasing, but also keep you top of mind to kind of navigate it as you continue to grow the company, which is of course the number one goal, right? Is to grow the company as a founder. But, if you can create your solid foundation, then you're only going to build up from there. And like I said, I think the biggest pitfall is just that founders and companies don't utilize the knowledge of their brokers to their advantage enough, and we're a lot of times kept at arm's length distance. So I'd rather have someone text me asking me questions, daily than someone who I don't talk to for 8 months. And then, we reconnect and find out that, they have hired 20 employees and you know, that there's certain discussions with the FDA and we're way behind on insurance, right? So, you know, I just urge you to use us and every insurance professional, or not insurance, every professional provider you have as a partner rather than a vendor.
Exactly. And if you find that they're having a partnership, like with attorneys, sometimes the billing structures are different. You want to find a attorney or law firm that works for you, in the sense that works with your structure. Like I do flat rates and project rates because I work with entrepreneurs and startups. There are other attorneys who do the similar things, but then there's other attorneys who, because of the way they do business, they do have to charge hourly. So knowing when you can reach out, what you have to do, could you put your service provider on a retainer, or if it's like Brendon, who's an insurance company who doesn't like, it's like you're not going to get billed every time you send him an email. You want to know those things. These what's make you going to help you to be a successful entrepreneur, successful business owner. So with
Right.
that, we will end this part of this interview because we're going to do the other one right after this.
Great.
So, and I will link both of them together when I upload the interviews. Brendon, thank you so much for joining me for this
Thank
interview.
you.
And thank you for everybody who's watching it. And I know this is a little longer. So next time, if you have time, catch our other interview too, or come back to it. Thanks for joining. And if you like this, please like, share, subscribe, and see you next time. Bye.
Thank you.